Welcome back to the FinTech Magazine show, brought to you by FinTech Magazine, InsurTech Magazine and BizClick. I'm Joanna England, and as always, we're bringing you all the latest news, analysis and opinions from the world of FinTech every month, right here on LinkedIn, YouTube, and of course, our other digital platforms. Now, joining me today for our second show of 2023 is FinTech and InsurTech editor, Alex Clere. Hi, Alex.
Hi, Jo. How are you?
I'm good, thanks. I'm good. Is your cough better?
Yeah, we're getting there. We're into February now, so we're starting to shake off the eels of January, so to speak.
Yeah, I'm glad to hear that, because you were suffering a lot in our previous episodes. So it's good to have you back on form, and I'm sure our audience will really appreciate that. Now, just a quick reminder for you to come and say hello, everyone in the audience out there, and tell us where you're watching from by posting in the comments section below, and also to go and vote in our LinkedIn poll, the results of which we'll have later in the show for you. Alex, can you remind us of the poll this week, please?
Yes, of course. So we asked you, what do you predict will be the most disruptive fintech trend in 2023? And we gave you 4 options to choose from: open banking, AI solutions, peer-to-peer finance, and blockchain. There's still plenty of time to cast your vote in that one. Head over to our FinTech Magazine LinkedIn page if you still want to take part, and we will reveal the results later in the show.
That's right. We'll be sharing those results of the poll at the end of the show, but there is loads to talk about before then. So let's start by taking a look at some FinTech and InsurTech news. Alex, tell us about your FinTech story for this month.
Of course. So my FinTech story this month is essentially a fundraising story. We hear a lot about the difficult fundraising environment that fintechs find themselves in, but GSS, which is a sanctions screening regtech, has secured $45 million from several major investors, including Alex Partners, the Cynosure Group, and MUFG. Now, this is particularly relevant this week, obviously, with President Zelensky of Ukraine visiting the leaders of France, Germany, and the UK, I think it was, to try and find additional support for his country's continuing war effort. 2 weeks today, it will be the 1-year mark since Russia invaded Ukraine in February last year. And we know what happened as a result of that conflict. Multiple governments around the world expressed condemnation for Russia's actions, and so they started to implement sanctions that targeted Russian individuals and businesses. So that meant that banks and financial institutions were facing pressure to clean up their black books, both for the obvious legal reasons, but also for the negative PR that was likely to come out if it turned out they were still doing business with a high-profile Russian client or business. So the problem was that there was multiple disparate sanctions lists. The US has a sanctions list, the EU has a sanctions list, and now that the UK has left the EU, of course, it too has its own separate sanctions list. A lot of these countries coordinated their efforts following the Russian invasion, but it still became incredibly difficult for fintechs, banks, and financial institutions to ensure that they were being compliant with multiple different lists at once. So what we saw was an emergence of innovative companies developing ways for large customer-facing institutions to cross-reference their clientele against sanctions lists and blacklists. Essentially a way for them to simplify compliance across all of their jurisdictions. One of those companies is GSS, which is a UK-based company. And it's worth pointing out that it's not just the Ukraine conflict that has contributed to this. We've seen in America, for instance, a tightening on rules around anti-money laundering. GSS was founded in 2021, but it seems to have been perfectly timed, really, with all of these geopolitical events combining to provide a useful backdrop against which for it to raise capital. Indeed, Randall Quarles, chairman and co-founder of the Cynosure Group, which is one of the investors taking part in its latest funding round, called GSS the right business at the right time, addressing a problem that is well understood but until now poorly addressed. GSS uses cutting-edge technology, including artificial intelligence, to establish a new standard in sanctions screening that helps to drive efficiency, speed up transactions, and reduce friction for banking customers. So the latest venture funding round that GSS has received is a $45 million investment, like I said, which it will use to support its continued growth and cement its position in the marketplace.
It's exciting stuff. And of course, regulation stories are literally mushrooming right now because as the fintech industry matures, we're obviously seeing a lot happening, especially in the digital currency space. And we've just had Davos, and that's just really, that's what so many people are talking about. And you've got to watch it carefully to keep up with all the changes. Now, what's your pick for InsurTech? What's happening in the world of insurance, Alex?
Yeah, of course. So I mentioned before about the challenging fundraising environment that companies are facing right now. And actually, I have some recent statistics that reinforce what I was saying from an insurtech point of view. So I'll start with the bad news, as it were, and then I'll try and add a little bit of silver lining to it, because after all, I don't like being a downer on a Friday. So the bad news is that last week, Gallagher Re published its annual insight into the state of insurtech, and it showed that insurtech funding had halved in 2022 compared with 2021. Total insurtech funding halved from $15.8 billion in 2021 to just shy of $8 billion in 2022. One of the more concerning statistics, however, regards the deceleration of funding towards the second half of last year. Total insurtech funding fell from $2.35 billion in the third quarter of 2022 to $1 billion in the fourth quarter. That's a reduction of about 57%. Gallagher Re points out that this troubling fundraising environment is underlined by the low levels of deal making generally in Q4. There were just 106 deals in the final 3 months of the year, the lowest number of deals in any quarter for 2 years. So clearly, the fact that insurtech funding was slashed in half between Q3 and Q4 of last year, more than half actually, suggests that the economic conditions are beginning to bite a little bit. It's understandable that venture capitalists and private equity would be a little reluctant or a bit more cautious when it comes to investing their money. We have a sort of compound situation between rising interest rates, rising inflation, tech companies that seem almost to have staffed themselves beyond their means, but also customers who are struggling themselves a little bit as well. Household budgets are being squeezed, so without knowing exactly how the current economic downturn is going to affect their behaviour, it's difficult to predict what knock-on effect there will be on insurtech adoption. That's the bad news, but I did promise a silver lining. The silver lining, of course, is that there are still insurtechs who are managing to raise money, large amounts of money. So I think it's evident that the funding is still available, provided your company has the right proposition and the right timings. In the last few weeks, Box Insurance raised another $15 million, Angle Health secured $58 million, and digital life insurer Dayforward bagged $25 million. There were also 7-digit funding rounds for cyber insurtech Baobab and embedded insurance provider Vertical Insure. So it's good to see cyber insurance startups doing well in terms of funding. I know there were concerns towards the end of last year about cyber insurers possibly suffering because cost-pressed businesses might down-prioritize cyber insurance in favor of more important business expenses. Likewise, it's possible that consumers are cutting back on things like contents insurance or travel insurance, either because they're going away less or maybe they're taking the risk of traveling without insurance. I think one of the categories that will win is embedded insurance. If the economic troubles we're seeing around the world deepen, then it's only natural to expect that fewer premiums are going to be written. Embedded insurance gives the industry a way to bring insurance products directly to the consumer at a place where they already exist online. So the famous examples being holiday rental insurance embedded into platforms like Airbnb, or travel insurance embedded somewhere like Expedia. I think the nature of that proposition means that insurers will be able to see some success, or at least to offset some of the challenges that the broader economy is presenting right now. And as a result, I would expect embedded insurance innovators to do broadly well in 2023.
Yeah, I mean, I think that's another interesting one, and especially when you're talking about embedded insurance, because obviously the transactional results are so much better for insurers with an embedded offering, as opposed to those that customers have to seek out in the marketplace. And I do think we have to remember that funding really in many ways has just fallen back to 2019 levels. And the pandemic did create an investment bubble. So I think although things look really bleak on the face of it, in reality, it's possibly more of a market readjustment. And there are, like you said, good value propositions that are doing really well. So it's definitely not all doom and gloom. I do appreciate that for a Friday, Alex. Thank you. Now, also, everyone out there watching, don't forget to tell us in the comments section where you are in the world and where you're watching from, because we'll be reading a few of those later in the show. And in a few moments, we'll also be showing you a snippet from our exclusive interview with Prakash Patni. He is the Managing Director of Digital Transformation, IBM Cloud for Financial Services. Now, he is an expert in all things cloud native and financial, and he talked to me about the biggest trends hitting fintech this year and what we should expect as 2023 unfolds. But before that, we're going to take a short break. See you in a few moments.
We've proven that it's possible to digitize large business at scale and quickly, and that the way you do that is by really anchoring your approach on the customer.
Yorkshire Building Society is one of the largest mortgage and savings providers in the UK. We're a top 10 lender, and we've got a balance sheet of over £55 billion and over 2.5 million customers.
So customer outcomes are essential to transformation. And the way that we do that at YBS is we design with customer needs and wants at the outset. And that's research-led, so that's not us second-guessing it. And once we've defined that, we get very, very clear and measure against customer outcomes rather than projects and programs. The core message for me around Yorkshire Building Society is it's an incredibly purposeful organisation. We have a real impact to society and our members. But traditionally, we've maybe not been able to do that with a level of capability that other providers can. So it can be difficult to do business with us, particularly if you want to operate digitally. We've been on a journey that's created the capabilities that allow us to not only be purposeful, but to do that in an incredibly modern and engaging way. We're removing friction all the time to make it really easy to do business with us.
Our vision for the next 12 to 18 months is really about how we can go from good to great. So we've got this vision that our mortgage and savings businesses can be really kind of quite distinct and quite unique by taking this best of breed approach, using digital and human to create something that's totally distinct in the market.
Welcome back. Now, still to come, we have the results of our LinkedIn poll. By the way, Alex, where are you joining us from?
Yeah, I thought we'd do something a little bit different this week. So we've got some lots of interesting comments on our LinkedIn poll. So we'll share those later on. But if you would like to be, given a shout out and mention on the show, just post in the comments where you're joining from, and we may include some of those later on as well.
And now, as promised, it's time for our interview. We, of course, spoke to Prakash Patni, who is the Managing Director of Digital Transformation, IBM Cloud for Financial Services. And we do have the full conversation on our website, or at least it will be up shortly, so you can go directly to that via fintechmagazine.com. But here's a taster of that interview now. So, looking at the market from that broad perspective, which trends are standing out to you in 2023 and why?
I'll touch on three that I'm seeing. The first one's really this trend towards hybrid cloud. So if a few years ago, you'd asked organizations about this, they'd have talked about moving everything to the cloud and even maybe to one cloud. But today, because of regulatory requirements around resiliency, concerns about concentration risk, also ESG becoming much more prevalent in their decision making, we're seeing clients want to get to that value quickly and meet all of these needs. So they're taking a much more thoughtful and measured approach. And so we're seeing a lot more of a mix of multi-cloud and continuing to use on premises. So clients are really picking the best place for their workloads across all of these dimensions: security, performance, innovation, energy, or ESG. So we're seeing many more clients, for example, look at how to modernize and integrate the mainframe with the cloud rather than just replace it, which can be costly, risky, and take a long time. And mainframe is really efficient from a power point of view. So that's also coming in as a consideration. So ultimately looking to get the best of both worlds. But they're also using different clouds for different workloads. So all the clouds have different strengths. And for IBM, it's really, our focus has been around the more complex, data sensitive, mission critical workloads. Now, one of the challenges of operating like this in a multi-cloud world is that you can end up with all these different siloed environments that are all disconnected, multiple clouds and on premises. And it's really hard to then monitor and secure all of this holistically. So one of the challenges with operating in this environment is how do you do that? And so this is really where we've been focused, is building on all these solutions that connect all of these different environments and let you operate safely and securely in a hybrid cloud world. The second trend is really the increasing focus by regulators on fintechs. Fintechs are getting much more embedded into the banking ecosystem and are starting to provide some critical services. And banks are now starting to look at their digital supply chain, of which fintechs are a part of, and how do you protect this? And we've seen an increase in breaches by via third parties. So bad actors are starting to target vendors because they think it's easier to compromise them rather than directly attacking the banks. And we've heard statements from regulators like Janet Yellen from the US Treasury. I think her statement was, while fintechs have undoubtedly increased innovation, they've also increased risk. I think that was a recent statement at the end of last year. So there's a real awareness of this risk in the digital supply chain growing. And how do you mitigate it? And so this is part of why we're working closely with fintechs to help them understand this and prepare for it, and working with a number of banks to help them de-risk their supply chain. Because if we don't fix this, it'll just slow innovation. And then the final trend I'll just touch on is this everything as a service trend. By this, I mean, instead of the financial services organizations picking all the components they need and building the solution themselves, like, I'll pick a cloud, I'll pick some fintechs, I'll pick other providers and integrating it all. They just want to go to one place and have it all provided for them. So we're seeing the growth of business process as a service, for want of a better phrase, right? So wealth management, trade finance, or even things like high performance compute as a service, where someone is managing your capacity, your software, running your simulations, the operations, the security. And in the case of high performance compute, this is being driven by regulators demanding much more risk assessment of a bank's portfolio, and banks need to be able to do this quickly, and there's often deadlines associated with this. So rather than them having to do all that work, they're like, someone come and do it all for me. And so we're seeing a growth in those types of as a service offering trends as well.
That was a really great interview, really informative, and we couldn't share the whole video at this point because we actually don't have enough time in the show. But as I said earlier, it will be available on our news website, so head over there to fintechmagazine.com to find out more. Now, BizClick is going to be very busy over the next few months because we have some major events on the horizon. As you can see, the graphics just popped up. The first event is our virtual event, and that's taking place on Wednesday, the 3rd of May, 2023, between 3 p.m. and 7 p.m. UK time. That's 10 a.m. and 2 p.m. New York. And we'll have some exciting announcements for you regarding speakers and panels in the coming weeks and months. But you can actually now book your completely free virtual tickets right now. So if you want to save your seat, just head over to www.virtual.fintechmagazine.com. Maybe we can flash that link up at some point. To give you a glimpse of what to expect at that virtual event, let's take a look back at our latest hybrid event, which took place in London in November 2022.
Good morning, everyone. This is FinTech Live London 2022.
We're extremely humbled and honored to once again headline FinTech Live right here at the magazine in London.
It's an incredible time to be around the financial services industry these days.
Currently in the UK, we have 6.6 million users of open banking.
What strikes me is the volume of people that are here. You know, incredibly well attended.
The speakers are really good. It's a really good show.
Great venue, great speakers. Couldn't ask for more.
Seeing the number of people and the talent that's here in London is kind of inspiring.
And there we have it. That's what to expect from our FinTech Live in-person stroke hybrid event for November 2023, and also our upcoming virtual event, which happens on Wednesday, the 3rd of May, 2023. Now, moving swiftly on, it's time to look at February's issue of FinTech magazine. And Alex is going to walk us through that. So tell us, Alex, what's your pick from the Feb issue?
Yeah, so in the February issue, we've got Abraham Lincoln in a pair of shades there. That's what we've got for you. I don't know what else anybody would want, really. But our cover feature this month is all about NFTs. We explored the current trend for digital assets and digital artwork, talking to industry experts about the scope for NFTs and what they can be used for, whether they're going to survive the crypto winter, and what the long game looks like from an NFT perspective. We also sit down for an interview with Dalmantas Vilinskas, the CEO of international payments business TransferGo. Now, they turned 10 years old last year, and they're really beginning to go from strength to strength, with 300 employees and 4 million customers around the globe. He tells us about his fintech inspiration and gives us a glimpse into what TransferGo has been getting up to. We also look at the state of fintech and the future of embedded finance. With the rush towards net zero strategies, we ask whether banks and financial institutions are overly reliant on carbon offsetting to help them meet their sustainability goals. And we count down the top 10 CEOs to watch in 2023. All of that's available to read right now on fintechmagazine.com.
That's right. And as Alex mentioned, you can't miss our cover feature this month, which is obviously on the future of NFTs. And it's quite interesting because NFTs have had quite a bashing lately. And I think that's mainly because it's a starter marketplace and it's not mature yet. So there are a lot of issues to iron out in terms of security and regulations. And essentially when you speak to the experts, they say, well, there's so much rubbish out there that it's really difficult to kind of filter things out and get to the quality offerings within the NFT market. But the possibilities are amazing. And with Web3 and the metaverse and blockchain advances, we're going to see a lot happening in that space. So do have a read of that. Now, moving on, it's time to take a look at the results of our LinkedIn poll, which is ongoing and has received an awful lot of votes since it went up yesterday, over 800. So thank you very much if you took part. And we've also had a few interesting comments too. Alex, can you remind us of the question and those all-important answers, please?
Yes, of course. So we asked you, what do you predict will be the most disruptive fintech trend in 2023? And the answers we offered you were open banking, AI solutions, peer-to-peer finance, and blockchain. As you say, a lot of engagement on this one. So let's take a look at the results. AI solutions was out in the lead by a long way, actually, 51% of the vote, followed by open banking on 28%, blockchain on 11%, and peer-to-peer finance on 9%. As you said, we do have some interesting comments on this one as well, which is brilliant. So thank you very much to everybody who's engaged with this poll. Edward from Payment Sense says that AI solutions are more likely to become a disruptive fintech trend, but his heart is still nonetheless with open banking. Christopher Boulin says, I personally believe this is going to be the year that investors realize the importance of securing data. So InsurTech, RegTech, and companies focused on compliance will be the topic. Thank you for that. I think GSS, as we discussed earlier in the program, would probably agree with that. And finally, Michael Yasanovic says, AI has already cost thousands of jobs in tech. There will be even more to come in the next 36 months. So I think that's a very valid point as well. Concerns around AI and automation replacing the human touch. There's still a couple of days left to take part in that poll if you haven't done so already. Just head on over to FinTech Magazine's LinkedIn page, and thank you to everybody who has voted and commented as well.
Yeah, that's right. Great results there. And I thought also that it was interesting that kind of security was flagged up in the comments there, because that's exactly what our interviewee Prakash was talking about just earlier on, wasn't it, in terms of what's going to be happening and trending this year. But thank you to everyone who's voted and commented so far. Our apologies if we haven't been able to get back to everyone individually regarding your input. Please know that it is appreciated. Now, sadly, that's all for this month's FinTech show, live on LinkedIn. We'll be back in 4 weeks' time on March the 10th with another packed episode. And we'll be discussing women in FinTech and InsurTech as part of that lineup, because, of course, March 8th is International Women's Day. So please do tune in for that one. And thank you to Alex for your brilliant insights, as always. Thank you to Prakash Patni from IBM for his interview today in today's show. And thank you to the production team for the show, who have done a brilliant job, as always. And finally, happy Friday to all of you out there. Enjoy your weekend, and we'll see you next time.